Hello traders, Greg here with Master Trader. And this chart of the week, rather than written commentary, I'm going to do a video. I'm going to review the broader markets. The markets are correcting a bit here, and who wouldn't expect it, of course. As the market dipped today, looking at the Dow here, you can see that it actually came back after the initial dip. So we can't really say much of a dip. However, it did close with a bottoming tail bar, and now the question is, can we get above the high of that bottoming tail bar? And that'll be the question for tomorrow. And if it does, it should take out that high and make a new all-time high, and then we'll see how far it'll go from there. That being said, let's take a look at some of the other markets. Take a look at S&Ps. They usually look pretty much the same, and that's the case. We got more of a topping tail on the prior day, and if this is the extent of the follow through to that topping tail, I have to say it's a little bit surprising. You would expect a pullback. We've got a couple of unfilled gaps over here, and a pullback into that area would actually be normal at this point to get a continuation pattern, which would be a setup where prices would take out the high and then get a measured move up from there. And what that is a move, get a little corrective type of pullback, a bottoming tail bar, and then a move equal that of the prior move. Now, those typically set up coming out of a base, and that isn't one here, but you can kind of see it's a little bit of the same type of a move, right? This kind of a whippy type of price action that occurred. It's not the textbook type of pattern. Now, having that happen after this move to happen here would be unusual and not the type of continuation pattern that we set up and take. That being said, trading that intraday, if it takes that out, we might do that tomorrow and look for some stocks that maybe showed some relative weakness and then are starting a move versus one that is continuing a move as this is. And we'll see how far that goes. The Qs, similar bottoming tail. Here was the pullback to the rising 20, the move up, bottoming tail bar. The question is, does it follow through, or is there no follow through to that bottoming tail bar? Well, obviously, we'll see tomorrow. The Russell, it's back to its sloppy ways. That was what it did the majority of 2017. And you had a lot of choppy price action. Sometimes there were these dips, and then it came back in a very strong way. So here we had this big bottoming tail bar a couple of days ago. It tried to get going. It failed. It had a dip today, a neutral bar here, where the body is about in the middle of the range. So the question is, which way does it go tomorrow? Today's range the low is our first reference point of support, and the high is our first reference point of resistance. And if it takes that out, it really should take out that high and then keep going from there. Obviously, we'll see. Part of the news today was in bonds. The breakdown that occurred, some of the news that China will not be buying our bonds. Well, is that a big deal? I don't know. We'll see. We're chartists, and we look at the charts from the perspective of the economy is improving, and unemployment being at an all-time low, and so on. This is exactly what is supposed to happen. Bonds are supposed to move lower. They have room to move lower. And why are they supposed to move lower? Because as an economy is really beginning to improve, what happens is interest rates start to move up. And so here's TBT, the ETF for yields. And you can see the bottoming action here and the gap up, and it pulled back here today. But this is exactly what's supposed to be happening, in that when you have an economy that's improving, yields should start to move up because there's a demand for money. Businesses want to borrow money to expand, buy equipment. Individuals want to borrow money maybe to start a new business or improvements in their house, buying new homes. Whatever the reason is to want to borrow money, yields should increase as that demand for for money increases. So whatever reasons being in the news, who's not buying U.S. bonds, so they're going down. Looking at it from the point of view of just a technical point of view, what's happening here is actually good. Now, what I would like to take a look at is commodities, the ETF for commodities, because we look for confirmation as yields begin to move up, are commodities beginning to move up. And they had this dip here into the end of the year, and they came roaring back again. So what we want to see is yields move up. We want to see commodities start to move up. And as we know, oil has already moved up, and maybe we start to see agriculturals start to move up as well. So yields going up, commodities moving up, markets move up. That's what is supposed to happen. Apple has been correcting here for a while. Gap down today, buyers showed up again. Trading range. Intel having more of a correction, and this is going to get interesting here because the big picture here in Intel is still bullish. Here's the monthly chart, and this is a great lesson in that. Here you have a breakout from a monthly chart, the little dip here, and it came back, and a consolidation at resistance, which is bullish price action, and then the breakout. So although the daily is correcting, what we want to wait for is this to pull back wherever it's going to pull back to. And it may pull back into this consolidation area. It may spring back up tomorrow. We don't know. At this point, we're just going to stand aside. But what we're going to do is wait for the daily time frame to form a bullish pattern to come in alignment with the monthly time frame, and that's going to be when we're going to want to buy some Intel stock because of the higher time frame. Facebook, now here's a breakout and a continuation pattern that is interesting because here we have a consolidation. Here's an initial move. Here's a bottoming tail bar, and it should take out the high, and then we could get a measured move to the upside. So there is a setup to keep an eye on right there. One that I posted today on the social media, StockTwits, Facebook, and Twitter, was Square. I'm looking for this to move up above the prior day's high and then get going. We'll see if it does that. It's got to take out the high or there's nothing to do. If it moves back down below the low of the bottoming tail bar, it just turns out to be a messy chart, and we avoid it. Google, move up. Not a bottoming tail bar, but a pullback and a green day. We'll see where that goes. Amazon looks much stronger, closing right up near the high with a little bottoming tail bar. So we have more and more evidence suggesting that prices should move up. Now, where's the fly in the ointment that could put a possible lid on here? Or if this does move higher, our market internals are going to come into alignment and give us a sell signal, which we haven't had one for a while. So sentiment is reached a bearish extreme, which could put a cap on things. And from this is a moving average of that sentiment, which pushed up into that area. However, day to day of it actually got there a few days ago, and that's created the topping tail and pullback. So still getting some choppy price action, but not until breadth and sentiment come into alignment with each other do we have a sell signal on the market. So we'll wait for that, and the market would have to continue to move higher. What happened through 2017, much of the time, was that when either sentiment or breadth got to an extreme, the other wasn't, and it moved in the opposite direction. So there was a long periods of time where we did not get a signal, and the markets continued to move higher. We use these internals to keep our bias in alignment what is actually happening. And so until we get an agreement like there was here, as the market pulled back, there was agreement between the two giving us a buy confirmation. And over here, where the sentiment got to an extreme, breadth didn't, so no sell confirmation. And the trend just continues to move higher. Energy, which looks great, and so it is stalled here for the moment, but from a longer-term perspective, it still looks good. It is coming up into resistance. We'll see how it deals with that. And here's another sector which is lagging XLE a bit, but this sector is definitely being bought, as it underperformed all of last year. So we'll see how far this goes. We'll see what happens in the markets tomorrow, and stay tuned, and we'll be updating subscribers accordingly on open positions and new positions. Good trading, everyone.